We have a market veteran joining us today on the show to discuss Outlook 2022 and exactly what is keeping him busy as far as market desk and research is concerned. N Jayakumar is joining us from Prime Securities. Jakes, good afternoon. Wish you a very happy new year. This time we are talking after a long gap. What's your thought right now? The way last 2-3 years have been for investing. What do you, if you take a step back and look at the bigger picture for 2022, what comes to your mind?
Well, for starters, safe and a relatively calmer 2022 is what I'd wish you, your viewers, and everyone else at ET Now, because we've had two absolutely tumultuous years, 20 and 21, and I think all kinds of volatility, not just in terms of markets and prices, but in terms of life itself, have been tested. So given that kind of a thing, I think we could all do with a much calmer outcome for the current year. Outlook being whatever, but the outcome should be much calmer is what I believe. But if you were to specifically focus on the markets, I think there is a little bit of a clear case of, let's say, markets having run up well ahead of themselves. We're hoping that the fundamentals actually end up catching up, and everything from economic outlook, corporate earnings, etc., need to catch up, else the higher interest rates, lower discounting will tend to result in lower markets. So for markets to remain where they are, even if they don't have to appreciate, you need corporate earnings to be, right up there at the higher level of estimates. You need the capex cycle up and about. You need government spending. And most importantly, you need economic activity at levels that we've been only I would not say fantasizing, but hoping for the last 2 years. What's helped India big time is the fact that nearly $35 to $40 billion of equity money has flowed into the startup ecosystem, which has dramatically altered our entire calculations, which means that when equity of this order flows through, and that equity then permeates to other parts of the economy, it results in higher consumption in various pockets. It results in higher employment in certain areas. It results in the startup ecosystem getting galvanized. But more importantly, where there's been job losses in the old economy, it's been more than sort of made up with jobs and employment in the new economy. So I think that's been the big savior for us. And whatever we might say, in the rest of the world, if debt money and low debt is what fueled economies world over, we've been fueled by long-term patient, and more importantly, startup kind of equity money, which essentially has meant that our ability to enjoy the fruits of a capex cycle, etc., may be much stronger. And even if the world outside were to face liquidity pushbacks and interest rates going up, I think we are, for the moment, much better served because we've been, blessed with equity money at ground level. And I think that's a huge difference compared to any other time when we received money, which was hot money. This is money that's come into the startup ecosystem, and that's got a much bigger cascading impact in the economy than anything else will.
Right. Jakes, what is your own sense? You speak to corporates of all shapes and sizes on ground. Do you see early signs of capex really picking up? Especially, what is the lending community, the banks, the large NBFCs telling you about how are things on ground? Which sector do you think from here on could take the leadership as far as the Indian market go?
The leadership will have to be taken up by the PSUs because spending at the end of the day is still, to my mind, in the domain of the PSU space. I do not see private sector stepping up other than one large, I think 75,000 crore, 10 or $12 billion project that ArcelorMittal talked about as a grassroots steel project. I haven't seen too many more projects being talked about in the private space. So I still think that many of the PSUs will still have to carry the onus. We probably will get at the margin, Tata Steel will be expanding its steel capacity, JSW will be expanding its steel capacity, but those are at the margin, not adequate for a large scale economic revival on the capex front. That still will be a PSU domain.
Jakes, there's also a sense in the market, among the strategists and market watchers, that the amount of money which has come into the startup ecosystem last year in itself was a disguised stimulus for the economy, because these are the guys who are actually going ahead and spending a lot on gig economy jobs, on other things, on infrastructure, back offices, all of that. So that amount of money is also giving impetus to the overall economy as such. Which spaces in the startup ecosystem you think could actually survive the initial volatility and move faster towards profitability as well? Because right now profits are not being talked about as well. Only growth is the focus area.
Well, for one, this was not disguised at all. I think it was as broad-sided as you could get. I think this was straight, up close and personal, $40 billion that's walked in. I repeat, it's equity money. It's not hot money. It's not money that's disappearing tomorrow morning. It's money that's here to stay. Money that's here to create everything from employment to demand pull expand the gig economy, as it were. So this is not disguised. This is, as sort of out in the open as you can get, number one. Number two, usually the government ends up overspending in the first 6 months of the year. And this usually happens even when tax collections are not as buoyant as they usually are in the second half. This time around, exactly the opposite has happened. Tax collections, in fact, in several segments have actually doubled. So the tax collections are way beyond even budgeted levels. Despite that, the government spending is much, much lower than expected, which is a bit of a surprise. So I think we need government spending to continue and, or rather to happen much more quickly than it's happened. And two, we need some amount of help from the private sector if there's going to be large-scale economic thrust at the ground level. Otherwise, it's pretty much the startup economy that's fueling the rest of the economy, where the money comes in and has a cascading impact, as I said, in the rest of the ecosystem. As far as which spaces there, we ourselves in Prime have been extremely active in the startup space. So, and we've done almost 8 or 10 deals in the pre-Series A, early stage financing as equity. And most of them have been in a different space. So we finance, for instance, a diagnostics company. When I say finance, as in raising equity for a diagnostics company called Hindustan Wellness. And being in the unlisted space, I'm able to speak about without any violation of or any disclosure issues, because all these are unlisted. A company based out of NCR now expanding called Hindustan Wellness has been, we've raised funds for them. A company in the EV space called Lithium has been sort of funded by us. A company in the fantasy gaming space, like Dream11, in the fantasy gaming space called Fantasy Akhada. We've done 2 rounds of funding, and we are in fact in the 3rd round at this particular point in time. We've raised money for a consumer company. We've raised money for so companies in almost 8 or 9 different segments. Last mile, there's a company called Last Mile Channel Enhancement for rural distribution that competes directly with Elastic Run and Udaan, which are more famous sort of older brothers in the space, if you will. So we've raised money for a company, as I said, which is in the rural distribution space, which expands the distribution reach for a lot of FMCG companies, especially the challenger companies. So virtually every space is at this particular point in time impacted. We're raising money for a packaged foods company right now called Thali Foods. So there's money being raised for all companies, different shapes and sizes, right from 5 to 10 crores to all the way to 60, 70 crores, 80 crores are being raised. So I think various segments, I mean, almost every segment of the startup space or early entrepreneurial space is being touched upon. And I think that has the kind of impact that we've not even envisaged will happen to the rest of the economy. While providing, I must add, while providing the resilience, even if money were to be tapered down in the Western world, that this money, being equity money, is here to stay.
Right, Jakes, no wonder the Prime Securities stock price is hovering near its 52-week high, if not all-time high, if I remember correctly. So from Jakes, the investor and banker, let's talk about Jakes, the investor. I'm told that not only are you working very closely in raising money for the startup ecosystem, but also personally investing in some of these unlisted interesting ideas. Talk to us about some of them, if you could, by examples. Where all have you been investing?
Well, our HNI clients, some of us ourselves, not necessarily HNI, but investors investing in companies. So we've invested in a whole bunch of them. Prime itself, by the way, converts a lot of its fees into equity in these companies. So a company, for instance, which is in the banking, risk management, and treasury and trade software, called IBS FinTech, for instance, is a company that has been started by ex-bankers, been on for a while. And they have, even today, for instance, a number of treasuries work out of, Excel spreadsheets rather than have a seamless automation with their bankers for trade, risk management, for monitoring transactions, for triggering transactions, for taking exposures, etc. IBS FinTech is doing a phenomenal job in this space. That's one company I can talk about. Another company, as I said, which is in the diagnostic space, called Hindustan Wellness. We've raised about 10 odd crores and in the process of raising another 25 crores for them. They are based out of NCR and they're expanding both in the north, in various places in central India like Madhya Pradesh, etc., as also in the western part of India, which is in Bombay, Nasik, and this part of the world. They have, they are a company which will in their first full year do close to 100 crore turnover with a 30 crore EBITDA. So very strong numbers. And the diagnostic space, courtesy the kind of testing mania that's going on right now, obviously is hugely impacted and hugely benefited tailwinds from that. Interesting company again. People talk about Robinhood trading, the day trading that's been going on, visible in companies like Zerodha, etc. Like Robinhood, trading is to the stock markets and therefore linked with brokerages. I believe that a national pastime right now in a lot of the smaller cities, in upcountry areas, in UP, Bihar, etc., is the fantasy gaming space, which essentially is nothing but you and me forming teams, feeding off a real match, a real football match, or a real cricket match, or a real kabaddi match, and forming a team which includes players from both sides, which is why it's called fantasy. And then using these skills, because the Supreme Court has held that this is a game of skill, not a game of chance. Now, this company, Fantasy Akhada, used to do a turnover of 80 lakhs. The gross gaming revenues were 80 lakhs for the month of March when we did our first fundraising at 35 crores. We did a second fundraising at a 175 crores when their revenues had quadrupled in 4 months. And now from July, August, their revenues have gone up a fivefold from 2.8 crores to 16 crores. In fact, almost 6 times over another 6-month period. So effectively, they have gone up almost 30x from March to December. And now we are in the process of raising money for them at a 750 crore valuation, when their valuation in March was nothing more than 35 crores. So this company has increased its gross revenues 30x and its margin 2.5 times in a 9-month period. That is the enterprise of young entrepreneurs. That is the beginning of a trend, which is the fantasy gaming space, where somebody like a Dream 11 is valued internationally at close to 10 or 11 billion dollars. So there are others that are there fighting for the number 2, number 3 spot. Hugely exciting space. It's here to stay. And real money gaming through this people don't have an ability to take this, make this play, because there are no listed companies with a pure play real money gaming. There are one or two companies that are in that space, which is sort of casual gaming versus gaming like Ludo, poker, etc. But real money gaming, which is sports based, this company, including the sports analytics piece that is developing, I think it's a trend for the future. It's a trend which I think we'll figure out a way that investors can have a play on this. And the numbers speak for themselves. The industry is growing at 20%. Individual company like this is growing at 30x over a 9-month period.
Wow. Amazing. Clearly, smart investors do find out high quality companies eventually. Thanks very much for your time, Jakes, chatting up with your framework and where you look for opportunities right now. Time for a short break. On the other side, more news and updates. Don't go anywhere.